Financial markets in turmoil.
What are the root causes of the financial crisis?
The dollar losing value.
Heading for its biggest loss in nearly 3 decades.
Will Social Security even be there?
I don't know.
Buy or rent?
That's a very good question.
Interest rates.
I'm not so sure.
Where do you put your money?
I don't know.
Welcome to the show that answers your questions. This is Follow the Money Weekly with your host, economist, and best-selling author. Here's Jerry Robinson.
All right, friends, welcome to you all around the world. Welcome to Follow the Money Radio. So grateful to have you here along for the ride. My name is Jerry Robinson, as you just heard, and today's episode, number 435, is entitled Crypto Investing in 2023. I want to welcome you to this episode where we're going to be diving into the exciting world of cryptocurrency investing. And in this episode, we're going to talk about the current state of the crypto market in 2023. We'll talk about some of the regulatory issues. We're going to talk about some of the difficult situations that we see right now, of course, encumbering the growth of the crypto market, along with some ideas on, investing strategies. Now, we all know that investing in cryptocurrency can be risky, right? But there's a potential for high returns, and that's why so many people are interested in the space. It's a new space, it's an exciting space, and we say it's new. Well, it's been around for more than a decade, but still, that's relatively new when you think about investment classes of investments. But whether you're a seasoned crypto investor or you're just getting started, this podcast I think is going to be helpful for you. So let's just jump right in and explore what the future holds for the crypto market and how you can make the most of it. We begin with Bitcoin, the largest, most liquid digital currency on the planet. It was the best performing asset of Q1 2023. When you look at all the major assets that are out there in Q1 of 2023, up more than 70%. In fact, year to date, here we are about halfway through April, it's up around 80%. We actually keep track of Bitcoin for our members. We've been, tracking the charts now for over a decade for our members here. And we, at the very beginning of the year, in fact, I was just talking about this on our live coaching call we do every single Tuesday, once a week for our members. We were talking about how at the beginning of the year, we had laid out our anticipation that Bitcoin was going to be a key beneficiary this year as we had declining or decelerating, we should say, inflationary figures, and then a move towards a pause and then a rate cut cycle by the Federal Reserve. Well, this is all bullish for risk assets such as crypto. And so we were talking about at the beginning of the year how we expected Bitcoin and other of the leading cryptocurrencies to be among the beneficiaries from all of this year. In addition to several other markets, we laid out about 8 or 10 markets that we expected to do well this year. We also talked about QQQ, the NASDAQ 100. We've certainly seen some big moves in big tech stocks and things like that. But looking at the crypto space, we look back at our original market outlook at the beginning of the year. We had expected Bitcoin to do well, and certainly it has. We've seen some really good gains. Right now, I'm looking at year-to-date relative performance here across some of the leading cryptocurrencies. You have Bitcoin up about 81% year-to-date. Ethereum, the second largest cryptocurrency, and by the way, the Shanghai upgrade is just around the corner, where they're actually going to be allowing those who have staked ETH to be able to then unstake it, which is going to be a huge proof of concept. And we would imagine that's going to lead to much more institutional demand for Ethereum. But ETH is up about 60% year to date. That's fantastic when you put that in relative terms. XRP, which we'll talk a little bit about later on in today's show as well, which is currently embattled with a big SEC lawsuit. They're up about 50% despite that lawsuit year to date. And then Litecoin up around 32% year to date. Now, we had told our members at the beginning of the year that we expected to see crypto rebound in 2023, and we do expect a good year this year as far as total returns. We've already seen it, but we would expect that by the end of the year, we'll even be higher from where we are now. 2024 also expected to be perhaps an even bigger year. That's the year of the Bitcoin halvening. We're not going to get into that today, but that's basically happens approximately about every 4 years, where the Bitcoin miner's reward gets cut in half. Basically just slows down the rate of inflation on Bitcoin. And in 2024, we're going to see, the inflation rate cut in half. It'll be pretty dramatic. In fact, the inflation rate on Bitcoin in 2024, according to the estimates I've seen based upon that and gold, will actually make Bitcoin less inflationary than gold. That's pretty radical when you think about it. So 2024 expected to be a big year. And then we expect 2025 to be the big blow off top, for Bitcoin. We've issued a $275,000 price target on Bitcoin expected for 2025. Sometime in 2025, that's the price we expect it to reach. That's our forecast. That's our target. Doesn't mean that it'll hit it, literally a forecast. But we're of the mind that it's very likely that we will see that level reached sometime in 2025. So we expect this next cycle, which is just now warming up, to span all the way into 2025, albeit not straight up. No market goes straight up. But you're going to see, kind of moves up and down, zigzag along the way. But overall, higher price is what we're expecting as we move out into the future. And this is partly due to the fact that we just simply have increased adoption of cryptocurrency by mainstream companies. You have a lot of companies that have, been very crypto friendly. They're adopting cryptocurrencies. They're adopting the blockchain technology that undergirds it. And then you also have the emergence of new technologies like decentralized finance and tokenization, which are really just kind of leading the way. In fact, Citibank put out a report not too long ago that was entitled Money, Tokens, and Games, Blockchain's Next Billion Users and Trillions in Value. That's quite a title for a report. And in this report, they basically said that mass adoption of cryptocurrency, they expect, is going to be driven by central bank digital currencies, these are CBDCs, and tokenization. So briefly talking about CBDCs here, of course, this is the central bank digital currency. We already have a Chinese yuan, a digital yuan. Japan has been talking about its own digital yen. They've delayed that for a bit. The United States, of course, here we've been talking about a digital dollar. We've talked about that before on podcasts. We've talked about that before in videos that we've done for our members. The idea of a digital US dollar, not too terribly far off. We already have the new Fed Now program, which is very, very similar to a digital currency. So we're certainly moving in this direction. And what I've said for a long time when it comes to CBDCs is while they are intrusive because of their privacy invasions, obviously, there's no reason why government should have this much control over the money supply, and certainly to be able to see everything that you're buying. I mean, when you think about a CBDC and your digital wallet that you'll have for those digital dollars, if you use it, technically the ledger is going to be able to be seen by the government. In government institutions. And so in some ways, this is an invasion of privacy. Not a big fan of that, of course. But what we've said for a long time is that if governments push out these CBDCs, then it's actually really good and bullish for what? Well, it's bullish for things like Bitcoin. And the reason is because look at the US dollar. I mean, you've seen dramatic loss of purchasing power over the last several decades, let alone the last decade, versus Bitcoin, where you've seen increased purchasing power over time, all things being equal. And so when people realize that they are using a digital wallet, they get comfortable with the idea of a digital wallet, say for the digital dollar or the digital yuan. Well, this just kind of brings them into the ecosystem. And then they can look at other cryptocurrencies, and it's not really proper to call a CBDC a cryptocurrency, but they can look at other digital assets and perhaps not feel, as if they're so foreign. So I think the onboarding of people to CBDCs is going to really create mass adoption of cryptocurrency in general, right? So we've been talking about that. Plus tokenization. We'll talk about that in a minute. When you're investing in cryptocurrency, though, you've just got to know up front that it's a wild ride. I mean, I invested in Bitcoin over a decade ago, more than a decade ago. And you may recall, for those of you longtime listeners here, I had a friend of the show, Trace Mayer, come on the show. We talked about cryptocurrency and particularly Bitcoin, which was one of the only cryptocurrencies at the time. And we started talking about Bitcoin on this broadcast more than a decade ago. In fact, I think we are one of the oldest programs when it comes to talking about Bitcoin way back in the day. So many of our members actually bought. In fact, I remember saying on this broadcast, just buy one Bitcoin just to see how it works. And, back at the time, it was like less than $100, So it was no big deal to go buy one Bitcoin. Today, you want to go buy one Bitcoin, you got to take out a second mortgage. I mean, it's like buying a car, So I said, look, just go figure out how it works. Just buy one just to see how it works. It's a new technology. It's burgeoning. The point is, though, is that it's been a wild ride over the last decade, plus. There's lots of risks involved. There's lots of volatility. There's regulatory changes galore. There's security concerns when it comes to where you're going to store your cryptocurrency. So, if you're planning on investing in crypto in 2023, you've got to be prepared. And as we mentioned, the crypto market can be super volatile. This means the value of your investments can, go way up one day and then crash, the next day. So you've got to be prepared to ride the ups and the downs, or to have a plan and to not panic when things kind of get wild, as they do in this space. Now, one of the biggest challenges that faces the crypto market and also crypto investors, crypto companies, anything involved in this industry, is the evolving regulatory environment, right? Still evolving. We have governments around the world that are still trying to figure out how to regulate this new asset class. And that means that regulations, may start off one way and then change without warning. And this can be very tough to keep up with. Even though they have put out some guidance, the guidance is a bit murky, and especially for companies that are operating in this space. So it can be tough to keep up with. And the U.S. has, quite frankly, taken a particularly hostile approach to the crypto asset class. I'll give you some recent examples in a minute, but just realize that not all countries are like this. Not all countries have taken such a hostile approach. Singapore, for example, one of the first countries back, I think it was in 2019, to actually provide some good guidance on this and to provide their citizens with crypto regulations that, while preventing illicit activities, they don't impose a capital gains tax upon cryptocurrencies, which helps grow the investment demand, for cryptocurrency in that particular country. So too, you have countries like Germany. I mean, who would think that Germany would be ahead of the United States when it comes to tax friendly? Because Germany is a very high tax country, but they've regulated cryptocurrency as private money. In Germany, there's zero capital gains tax on assets that are held over a year, right? So there's no punitive tax upon those who are just long-term investors in this new burgeoning space. Switzerland, private investors pay zero capital gains tax. Portugal has decided against imposing any taxes upon crypto. So there's lots of different places. Malta, Bitcoin island. El Salvador, very Bitcoin friendly. So there's lots and lots of movement in this space by countries that are looking to kind of get a prime mover advantage. Now, you look at countries like China, for example, they're absolutely the opposite, very hostile to cryptocurrencies. Japan, as I had mentioned to you, who is seeking to roll out a digital yen. We don't know when. They've delayed that. But they certainly also have kind of taken a harsh tack towards cryptocurrency. But here in the United States, the tax laws, the regulatory environment surrounding cryptocurrencies, they're hardly transparent. And Washington has yet to unveil clear guidance for its burgeoning crypto industry. There are some bills in Washington that could help improve this situation. There's the U.S. Responsible Financial Innovation Act, also known as the Loomis-Gillibrand Act, which basically calls for a clear standard for determining which digital assets are commodities and which are securities, right? That way there's clarity. That way there's structure for businesses and regulators. You also have H.R. Bill 7614, which is the Digital Commodity Exchange Act of 2022. This bill allows for the regulation and registration of digital commodity exchanges, with the CFTC, Commodity Futures Trading Commission, kind of overseeing them. So we need to see some movement on this, and the Congress needs to act in some way to provide some clarity, in our opinion. Now, if you look at some of the recent regulatory issues here in the United States, we have exchanges that have come under pretty intense critique from the government. And I'm not necessarily opposed to that. Exchanges are great for being able to buy or trade cryptocurrencies, but keeping your crypto on the exchange is just a really bad idea. FTX was just a classic example of how bad of an idea it is to leave your crypto on the exchange. And so we've been teaching our members for over a decade to, when you buy your crypto, you take it off and you put it into cold storage, right? You've got to keep it off of the exchanges. Well, we're not of the opinion that exchanges, need to have total free reign. We want them to be heavily regulated, of course, with smart regulations, because they're handling people's money. And so they should be regulated, of course. But the problem is that the regulations are unclear. And many of these companies are they got their hands in the air. Kraken Kraken, for example, it's one of the leading crypto exchanges here in the United States we've used for a long time. They were fined $30 million by the SEC and also ended up shutting down their staking program, right? Just recently. This was just a month or two ago, I think. The SEC targeted Coinbase, which is the largest US-based cryptocurrency exchange, and they're accusing them of facilitating the trading in unregistered securities. And so their remedy is likely to be punitive fines and also a big change in Coinbase's core business. They also targeted Coinbase's staking program, or its staking unit called the EARN program. Now, the SEC and the CFTC, which is the Commodity Futures Trading Commission, and then you also have the Securities Exchange Commission, these two have yet to agree even on what the nature of a cryptocurrency is. I mean, the SEC considers most cryptocurrencies to be unregistered securities and therefore subject to their oversight. And then you have the CFTC, which is saying, no, cryptocurrencies are commodities, and they're subject to less stringent oversight by us. But as I've been saying for some time, we're not of the opinion that the SEC is really going to have its way ultimately in this. We suspect there will be some movement from Congress that will clearly define this. Maybe we will see the birth of a new agency within an existing department, just some sort of agency, or maybe an existing agency that is going to be, have some new unit in place inside of it that allows for the regulation of this industry. And so we expect that the Congress, if not the courts, are going to step in at some point before this gets taken too far. So we can certainly see that. There's also a big SEC lawsuit against XRP, Ripple Labs. As I mentioned, Ripple was XRP was one of the very first cryptos I bought. I bought Bitcoin over a decade ago, and then maybe just a few months after I bought XRP. In just a few weeks or maybe a couple more months, we're going to learn the outcome of the SEC's lawsuit against Ripple. They've labeled XRP as an unregistered security, so we're going to find out what that's all about. But that ruling is going to be very, very important for understanding how the future may look for the crypto asset class. So we'll be very closely watching that outcome. You also have Bittrex. For those of you who've been in the crypto market for a bit, you may have heard of Bittrex. This is a particular exchange. They recently shut down their U.S. operations after being unable to work out a sensible deal with the SEC. So Bittrex got shut down, but they shut themselves down because they couldn't work out a deal with the SEC. As I mentioned, Coinbase has been complaining that the SEC and the government is just not providing clarity here, regulatory clarity, so they can operate in a way that is within the law. You also have the CFTC targeting Binance. So Binance, has regulators up in arms in many other Western countries as well. The CFTC has accused Binance of allowing illegal derivatives trading and helping U.S. customers circumvent its compliance controls. That led to a big, massive outflow from Binance, like $2 billion in just the course of a couple of weeks after that announcement. There's a lot of kind of shoot first and then ask questions later kind of approach from U.S. regulators. And if you want to understand why U.S. regulators have become so aggressive regarding cryptocurrencies in recent months, it helps to remember that Washington is run by corporations, right? This really kind of helps understand. And also, don't forget, in addition to the fact that Washington is run by corporations, that Washington controls, pretty much the global economy through the U.S. dollar, right? Their U.S. dollar standard is the standard for global finance, is the standard for the global economy. And so they have the most to lose. We're talking about cryptocurrencies, right? So these are actually competing currencies with the U.S. dollar. So Washington has the most to lose out of anyone, right? So this helps explain their war upon crypto. But again, don't forget that Washington is owned by corporate America, right? Don't forget the corporate aspect here. Corporate America represents you through your choice of a corporate-controlled Republican or a corporate-controlled Democrat. It's an illusion of choice we've been talking about forever, and it applies here as well. Right. So I've long talked about politics and the vanity and the silliness of the whole thing, where people think they have a choice. And in reality, they really don't. You have corporate-controlled politician A in a blue garb and a blue gown, and then you have corporate-controlled politician B in a red gown, right? And so which one do you want? It's really just an illusion of choice. We call it free and fair presidential elections, but indeed, it's difficult to remember the last U.S. president who wasn't completely owned by corporations and/or foreign governments, right? So you just can't even think of one. You can't even get to that level without being bought out or being willing to be bought out. Now, the financial sector and the banking industry are some of the largest corporate influences upon Washington, right? So with that in mind, consider this report that came out from Cointelegraph just a handful of days ago. It's entitled Bank Profits at Risk from Potential CBDC Transformation of Global Economy. And here's a quick quote from it. The very first sentence. Emerging central bank digital currency cross-border transaction technology could transform the global economy by providing faster, cheaper, and safer services for many of its players. But banks may not fare as well in that new economy, Moody's Investor Service said in a report dated March 21st. Okay, so according to this report by Moody's, while banks are expected to play a major role and stand to benefit greatly from a CBDC, they would lose out on cross-border transactions. Now, right now, banks enjoy hefty fees from foreign currency exchange and correspondent services like fund transfers, settlements, check clearing, wire transfers. And so there's a huge business here playing middleman for all of these cross-border transactions and other types of transactions. And so therefore, banks are obviously fighting at the forces of digital currency that are coming to play kind of a disintermediary role. Moody's research found that banks could suffer as deposits would be forced to compete with the digital currency stored in personal wallets within households' liquidity portfolios. In other words, let's say that we have a US digital dollar and you've got digital dollars in your wallet. Well, suddenly now you've got a wallet, it has a digital dollar in it. Well, you may not keep it down at Chase, right? Because you've got a wallet here. So in other words, they're walking a very fine line here by releasing a digital dollar and trying to keep the banks happy. Remember, the banks are a huge influence upon Washington, big corporate influence upon politicians. And so banks are very concerned that they're going to have to raise their deposit rates to attract money, which would leave them with less profit, even though it's going to lead to faster, cheaper, and safer services for their customers and for people in general. That's not good news for the banks because they're going to lose out on some of their profits, right? So households are going to benefit from this, of course. Higher deposit rates from banks competing for the capital, that's great for the average individual, but it's not good for the banks. And they're the ones who have an outsized influence upon many lawmakers in Washington. So you got to keep that in mind. It's not just, we want to protect the people, from this unregulated market. I mean, undoubtedly needs regulation, but the facts are who's going to regulate it? How is it going to be regulated? I've often said that if Wall Street had about 10 more years of a head start, well, they wouldn't be worried about this radical technology, this new blockchain technology that's shaking the world. They would be more comfortable, but they realize they have a lot to lose. There's so much to lose here, especially when you have these kind of disruptive technologies. And so Wall Street, very concerned. Right. Also, in addition, I talked about tokenized finance. This is really interesting. There's a report here from Citi researchers. The headline is Tokenized Securities Market Could Reach $4 Trillion by 2030. Simply incredible. Tokenizing financial and real-world assets could be the killer use case that blockchain needs to drive a breakthrough with trillions of dollars worth of securities tokenized at the end of the decade. The report says almost anything of value can be tokenized. The bank forecasts up to $4 trillion in tokenized digital securities and up to $5 trillion in CBDCs could be circulating in major economies in the world, half of which could be linked to distributed ledger technology, right? So in other words, what we're talking about with tokenization is taking real world assets and then literally just tokenizing them, putting them on the blockchain, which allows you to track them and which allows you to verify them, right? So it's a very big deal. And Citibank believes that the tokenization of financial and real world assets on the blockchain platform would not only be a killer use case, but it would grow by a factor of 80x in private markets, as I mentioned. So reaching up to like $4 trillion in value by the end of the decade. Here's how the Citi report defined successful adoption, crypto adoption. Listen to this sentence. It says, successful adoption will be when blockchain has 1 billion plus users who do not even realize they are using the technology, right? That's important. That's the way it is today. I mean, when the internet first came out, back in whenever the consumer version of the internet came out, where people actually began using it, say in the 1990s, nobody, realized they were using TCP/IP or, SMTP or any of the, or HTTP. They weren't thinking about the protocols. They had no idea. They just wanted to, they wanted to send an email, or even today when people hop on and they're just looking at their Facebook app or their Twitter app or whatever, the LinkedIn app, they don't know what's going on. I mean, just like when you walk in a room, you flip on the switch, you don't know what's going on. The electricity's beaming in, but you don't know how it all works, right? You're just using it, And I think that's where we are now. We're in this very early stage with cryptocurrencies where it's very geeky and everything is about the undergirding technology, but the apps that or the way you call them in the digital world are dApps with a D, these are still forthcoming. So I totally agree with this report on this particular aspect that successful adoption will be when blockchain has 1 billion plus users who don't even realize that they're using the technology, right? So in other words, when the dApps are out there and you're actually using all of these different types of applications, but you don't realize that it's all running on the blockchain itself, right? It's not even a thing. You don't even think about it. It's the same thing with the internet. People don't have any clue. Most people don't have any clue how the email gets from here to there, nor do they care. When they get onto Facebook, they don't know how the website translates, from the server all the way to your desktop computer. Who really cares, quite frankly, as long as you can access it, right? And so today, millions and millions and millions of people or billions of people use the internet and they don't even think once about it. It's not even they're not even thinking about the undergirding technology. I mean, it's not even a thought. And so that's the same thing that's being said here. Right now, we're still in the geeky phase of learning what it is and, what's blockchain and what's DeFi. And we're still learning all of these words, but we're not really in a place where everybody is using the applications. Well, that's where we're heading next. That's the point. And that's what Citibank sees, that by the end of the decade, we could be talking about a totally different kind of world where blockchain is really embedded and people are actually using dApps, that digital apps that are allowing them to interact with the blockchain without ever even thinking that's what they're doing, right? And so the same thing with the internet. So tokenized finance, this is huge. And again, tokenization is where you bring traditional financial assets onto the blockchain. It's incredibly disruptive, but it'll deliver efficiencies big time. Now, I mentioned also when you're investing in cryptocurrencies, you got to worry about security, right? Big concern when it comes to investing in cryptocurrency. The best thing you can do is keep your cryptocurrency off of the exchanges and just keep it offline in general. Not even having a hot wallet online, but instead keeping it in cold storage. We like to use hardware wallets like the Ledger or the Trezor, right? We think these are really useful tools. Otherwise, you leave yourself open to hacks, maybe on an exchange or maybe hacks on a smart contract or cyber attacks of some kind. So you really want to protect your investment. So many times, people will put a lot of money into cryptocurrency, but they won't spend hardly anything on protecting it, and that has to be something that you think about. So we really strongly encourage a hardware wallet that's offline, doesn't touch the internet. That way you're not at all at risk of that kind of a hack or cyber attack. But don't let that scare you off. I mean, I think that's another thing too. There are risks and challenges, but don't allow those concerns to scare you off entirely from the asset class. Because with the right strategies and the right mindset, you can still make very smart investments in this space and potentially reap big rewards. Talked about some of the regulatory issues and some of the state of the market. Let's just talk about strategies for crypto investing. First, long-term investing. I think this is the best approach. This is the approach we've taken. That's probably why I think it's the best. But if you believe in the long-term potential of cryptocurrency, and if you're willing to hold on to your investments for several years, well, I think this could be the best strategy. So the idea here is to buy cryptocurrencies and then hold them without getting too caught up in the idea of short-term market fluctuations. Now, the way we do it is we do a dollar cost average strategy. So on a regular basis, we buy cryptocurrencies and we hold. Now, there is the case to be made for taking some off the top whenever you have these really big, massive rallies that tend to be, kind of cyclical, and then really taking advantage of major busts, like when the market moves into a crypto winter like we had in 2022. That's a great time to add, maybe aggressively to your portfolio, and then you take some off the table whenever you move into a bigger rally. I think that's the best way to approach it, in my opinion. I've seen many people succeed with this. Now, while long-term investing with a dollar cost average strategy, I think is the best way to approach cryptocurrencies, I also have to say that the other strategy of short-term trading is also really powerful, because I've got to be honest. I traded my first stock, 1996. Okay. And since that time, I don't think I've ever seen an asset that is better for trading than crypto, because it's always open, right? People say, well, that's what the currency markets are, or they may point at something else, but the crypto markets are always open and they are volatile, which is exactly what traders want. So I often tell people when they're learning to trade that crypto can be one of the very best assets to trade, because there is so much volatility, there's so much movement in it. And if you're trading, that's what you want. You want the asset to move. So the idea here of short-term trading, I think, is a good idea if you want to approach that, but I wouldn't do that without some long-term core holdings. I would want to have exposure to Bitcoin and Ethereum, but then I could maybe trade around those positions. So I think short-term trading, which involves buying and selling a crypto in a short period of time, maybe a few days, a few weeks, that can be risky, of course, but it also has potential for higher returns. But I wouldn't do that if I didn't already have an investment portfolio with some exposure to cryptocurrencies. Of course, you also want to limit how much you put towards crypto. Never put anything in crypto that you're not willing to lose. I mean, it's a burgeoning new asset class, and anything could happen, right? Anything could happen. So you don't want to put more money into it than you can lose. And this has been one of our big rules we've been teaching our members now for a long time. I personally, and I've told you before on this podcast, I personally limit our total investment into crypto at 5%. So if I have $1 to invest, well, a nickel will go into Bitcoin. Okay. I'm not putting $1 into, I'm not taking, 100% of my money and putting it all, into cryptocurrency. No, of course not. There's real estate, there's stocks, there's ETFs, there's gold and silver, there's bonds. I mean, there's all other kinds of asset classes that you can look at. So no, we wouldn't put, all of our money into cryptocurrency, but we put in a nickel out of every dollar that we have to invest into Bitcoin. And to me, that works. That's been a great strategy for us over time. But in addition to that, another key here when it comes to investing strategies is diversification. It's key. Just with any type of investing you do, diversification is key. You don't want to put all your eggs in one basket. You want to consider spreading out your investments across different crypto projects and other assets. And whenever you're looking at cryptocurrencies, I've done a lot of teachings on this. We have a course on Bitcoin and we have a course on Ethereum and many of the other cryptocurrencies for our members. But you want to evaluate these different projects based upon fundamentals, the team that has put together the project, who's behind it. So many things that you want to look at. You want to pay attention to the news around that project to know what's happening. You've got to be prepared to adjust your investments too accordingly. And finally, in addition to diversification, just risk management. Are you going to use stop losses on your long-term holdings or not? I don't, because I just limit how much I put into the space. But now in my trades, I always use stop losses, But you also want to think about, what are your investment goals? What are you trying to do here? What's your approach? And you always want to be ready for the market to turn down. What happens when a downturn arrives? Are you going to sell everything at the bottom, or what's your plan? Don't do that. You want to have a better plan than that. So, risk management, diversification, these things are so vital. These are just a few of the strategies you can use to make the most of your crypto investments. There's no one size fits all approach. I have an approach I really like. I teach our members, but you really just do, what fits your own temperament, what fits your own goals and aims. Just find the strategies that work best for you and your investment goals. Finally, what I want to do now as we kind of bring this to a close is I just want to briefly talk about some of the factors that could impact the future of cryptocurrencies as we move forward. Okay, so 2023, we expected, as I said at the outset, we expected cryptocurrency to do well. It's doing well. We think it's going to continue to do well this year, albeit, 2 steps forward, 1 step back, not straight up. 2024, we expect it to be another great year for crypto. And in 2025, we expect that we're going to see the peak in this current cycle that will then end and then followed by another big bust. That just tends to be the way that the crypto market moves. And there's no guarantee, of course, that past performance is indicative of future results, but we do certainly see a cycle that plays out, especially in Bitcoin. And that's what we expect. We also expect that the regulatory environment for crypto is going to continue to be very volatile, very difficult. We don't expect any immediate solutions. So there's probably going to continue to be lingering problems in the regulatory area, especially here in the United States, because the government is fighting this. They are concerned about what it means for the dollar, what it means for Wall Street and banks. I mean, there's a lot of concerns here. So expect, more pushback and more pushback. But I think what you're seeing is that more and more people, even in the House and the Senate, many of these people don't even know what a Bitcoin is, but they understand that innovation and business-friendly proposals are vital if they don't want to run off the entire crypto industry from America. And that's what they're doing. Coinbase is talking about moving, some of its units offshore. Other companies are shutting down and leaving the country because they just can't handle the, schizophrenic kind of regulations. It's not real clear. So be prepared. As an investor, you got to be prepared for this. Regulations could change quickly and without warning, and that can have a significant impact upon the value of your investment. So you got to be ready for that. You got to be prepared for that. And then there's also this evolving technology behind cryptocurrency. So not only do you have, regulatory environment that's changing and evolving, governments, fighting this and not sure how to handle it, well, then you got evolving technology, which is just changing. So what sounds like, the killer app, tomorrow, it might be something different. Developers are constantly working on improving the technology and constantly getting new crypto projects that come out. And that's going to impact values and all of this. And of course, you're going to have the adoption continuing to grow. Mainstream acceptance of cryptocurrency, we expect, is going to be another important factor that's going to continue to grow. Businesses and individuals will start using in cryptocurrency even more and more as we move throughout this decade. I think that's going to lead to an increase in the value. We talked about tokenization. We talked about CBDCs. All of this is warming people up to the idea of cryptocurrencies. And then, of course, you have a whole host of macroeconomic factors that could impact your investing in the space. You got inflation, which appears to be coming back down to earth after a sky high surge throughout 2022. And then, you have other things, recessions, you have economic instability, you have all these kinds of issues that could arise that could certainly impact the price of cryptocurrency. So there's plenty of factors to consider when you're investing in this space. So you want to stay informed, you want to pay attention to those factors so you can make informed decisions. All right, so that pretty much brings us to the end of today's podcast. I really wanted to spend some time just covering investing in this space in 2023, talk about some of the latest action, talk about some of the latest price action that we've seen, also some of the latest regulatory action. We talked about some of the risks and challenges that come with investing in crypto. You got market volatility, regulatory uncertainty, cybersecurity risks, hacks, and then we talked about some, popular strategies here. Long-term investing, I think, is one of the better ways to approach this because it's so new. And, 20 years from now, who knows what the value of some of these could be? Some of them can be gone and others could be worth tremendously more than they are now, right? To me, it represents a pretty darn good risk-reward potential. And then, of course, we talked about short-term trading. One of the best assets, in my opinion, to trade would be cryptos because they're so volatile, right? And then diversification and risk management. These are all very important things. You got to remember, though, when you're investing in crypto, it can be risky. There's no one-size-fits-all approach. You got to do your own research. You got to diversify. You got to be prepared for market volatility. But there's a lot of exciting developments and opportunities ahead, I think, for those who are willing to take the risk. And as always, we encourage you to stay informed and stay curious. Who knows what the future of cryptocurrency holds? All right, friends, welcome back to the program. We're in our final moments of today's broadcast, and I want to thank you for tuning in to today's episode where we've been discussing the current state of the crypto market and crypto investing in 2023. I hope you found this episode informative and insightful and that it gave you a better understanding of the current state of the crypto market. As always, we welcome your feedback and suggestions for future episodes. If you have any questions or topics you'd like us to cover, don't hesitate to reach out to us. You can go to followthemoney.com/contact or reach out to us through one of our social media channels. On Twitter, we're on Facebook. You can find us there. And finally, if you found this episode helpful, please consider sharing it with your friends and colleagues who may be interested in crypto investing. We appreciate your support, and we'll be back with another episode very soon. And before we close today's program, I always like to leave you with a final word, this time taken from a famous cryptographer and blockchain developer, Arif Nassim, when he said, "In this age of technology, knowledge is power, and crypto is the knowledge currency of the future." That's just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
Information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted